FOMC meeting. Stick around. We're going to find out what's crack-a-lackin'. Did I say crack-a-lackin'? Question everything. Trust nothing. Welcome to Debate Crypto. It's your boys, Keeper and Crusader, here for a special FOMC meeting. We are here. We're going to give you the alpha. As always, Crusader, how is your day going? Is your day crack-a-lackin' like the intro?
No, my day's not crack-a-lackin'. It's been pretty chill so far. You know, hit the gym, trying to get big, trying to compete. Can't let you get too bigger without me.
We're going to be the Crypto Swole Bros instead of Debate Crypto. You know what I mean?
You let the people know our secrets. All the people know the secret.
Chat, you gotta, get on Crusader to continue to stay in the gym. We definitely are rebranding to the Crypto Swole Bros. We're gonna be walking around the events with no shirt on, but I gotta get Crusader on board first.
This has been the
Crypto
longest
Swole Bro and Co. We gotta be the Crypto Swole Bros.
This has been my longest trial run at the gym. Like just so.
How long you been going?
I've been going since July. Yeah, since July. Since
nice.
Beginning of July. So
I know. Instead of calling you in the morning and getting straight to voicemail because you're still sleeping, I hear weights racking in the background and you answer the phone. So
yeah, dude, it's definitely helped. I mean, waking up extremely early, hitting the gym, because I always try to hit the gym like later in the day, at the end of the day. Never
dude, I think it's the way to go. Chat, tell me, do you guys work out? We ultimately, I think that after years and years of going back and forth, I think that waking up first thing and getting after it, I just feel better, right? I've heard people say, oh my gosh, how can you do that for fun? It's not so much that I quote unquote do it for fun. I like the results from it. I feel better from it. I look better from it. And ultimately over time, obviously you're going to live longer. And we got to stay around. We got to stick around for this AI, revolution. We need to be swolled up to fight with the bots,
the Terminators.
That's right. We got to be big like Arnold so that we can fight with the upcoming Terminator revolution that's coming. Patriot Caveman first in the chat said, "Ouch, this is not the chat that I wanted to see, but we'll put it up there anyway." Yo, fellas, let's go. I just got liquidated. Well,
if you would have seen my P&L, you wouldn't be too worried about it. Trust me. I feel you, bro. I feel you.
We do. We feel you. Trading's tough. It is the price to pay for learning to trade. And I don't know if you've been trading for a while and you just happen to get liquidated, or if it was, just a one-off or whatever. But I want to throw out there, we have got some good stuff coming up that we're working on in the background. I kind of alluded to it yesterday. We've got a really cool spin on the show that we are going to be introducing, and I think you guys are going to love it. Mondays and Thursdays are about to change drastically, and they are going to be fun. We're going to be the only show like it. I will tell you, you will be excited. So stick around. Make sure to smash the like if you haven't already. It's the FOMC meeting today. Let's kick it off. Let's just take a look at where the markets are at. We got a couple articles that we're going to get into, and then at 2:30, obviously, we're going to hear your boy Jay Powell speak, and hopefully he is dovish. Well, that's generally good for the markets, although last time they introduced a rate increase, we still pumped anyway, so you never really know what's going on.
I think today they're
going to freeze.
There's a website that like guesses what they're pretty accurate. I believe that their majority are betting freeze. on a freeze. No rates.
I think that's kind of what everybody is throwing out there.
That cut, baby.
That's right. The global crypto market cap is at $1.08 trillion. That's trillion with a T, and that's up the exact same as yesterday, 1.08%. Bitcoin's up a measly 0.08%. At 27,199. ETH's down just a little bit, but that's how it goes. BNB $215. Cardano sitting at 25 cents. It's just been hanging out there, just like Dogecoin sitting there right at about 6 cents. Toncoin came out of nowhere, was up like 40% on the week as of yesterday. Now it's up about 31%, so it's down a few percent today. Solana making a little pump as well at $20.29. All right, so that's the top 10. Let's actually take a peek. Let's go to the categories here. What is okay, so what is this thing? Communitas Launchpad up 204.96%. If you missed it, well, looks like you missed
Those are
it.
communities launchpads, but like in a mixed version of Spanish. Comunidades
That's not
launchpad.
Comunidades with a K and a T.
Well, obviously, like the K is not proper.
You're saying it's a play. You're
It's
saying
like
it's a play on
like
that?
a Spanish communities. It looks like that's what it sounds.
Well, we've got Bull Perks Launchpad up 90%, and the Metis DAO ecosystem up on its hummus, as you can see. That's that hummus is up 46.73%. I like hummus. So yeah, just something a little bit different. Just wanted to kind of look at over at a couple launch pads there. We are actually now down. We're at 1.07 trillion. So maybe some news just came out and we didn't see it yet. But we'll find out if you guys are paying attention.
I got some TA. We can show some quick TA here.
Yeah, let's do it
before the FOMC meeting starts. So let me share my screen here on the 15-minute. You've been trading Bitcoin today. There were some pretty good trades to take. If you can see here, let me use. Okay, there you go. So this is the daily range, right? Let me get this out of the way. This is the daily range, and as you guys can see here, well, actually, I'm on the 3-minute, but it doesn't make a difference.
DGen mode. He's in DGen
3-minute, 5-minute. It doesn't really matter. Once you're trading like 15 minutes or lower, it doesn't really matter if you're starting on the 3-minute or not. But long story short, earlier today we had a trend that we broke out of. I'll draw the trend line here. I just deleted it. This was the trend, and we broke out of it.
What about 10 o'clock this morning?
Where's that trend at? No, this isn't it. We had a trend. We had a downward trend here that because we had a swing failure pattern up here at the value area high. We broke out of it. We went out. We retested it, and then ever since then we've been crawling up. Right, we've been crawling up over here, and now we have this trend line that's been holding support here since down here. We've been building on the way up, so we'll see. Right, oscillator over here from ChartPrime, pretty low on the downside, so we could be getting a bounce here. Could be lining up perfectly for let me jump out to the 15-minute. Yes, for the news to actually drop and break. So on the 15 minutes, not looking so hot. Reversal signal in the last 30 minutes hit. The oscillator has been having this what you call this thing, like a parallel all-time high here. Every time you get here, it gets rejected. I forget what the term is called for that. So that's not looking too good as well on the 15. But if this trend line keeps getting supported and holds, and the news comes out and it's good, might be a sell the rumor or buy the rumor, sell the news kind of event, and maybe it'll dump. But I think it could hold. It could have some excitement, and we could maybe have a little bit of pump here. We don't break this trend line. We break this trend line, we're going to be losing the daily pivot. That'll be the next target. We lose that, it's going to be value area low, which is this yellow line. We lose that, which is obviously not too far. They're very close to each other. They're like less than $60 apart. So that's literally nothing for Bitcoin to move. Yeah. If we lose that, we're heading back to the previous week high, which is 26.86. And you definitely don't want to be losing that, because then you're just heading straight down to 26.63 weekly open, and it gets messy from there. You definitely don't want to do that.
Yeah, I mean, ultimately, we have seen Bitcoin do absolutely nothing over the past and been very boring. And then we've been getting a little bit of price action recently to the upside. So we're going to find out. I've been talking specifically about still seeing another dump. I'm not still pulling off of that thesis. I think that we're still going to see some pain. I just don't know where it's going to be. I really think it's going to line up with this October Bill Noble, what is it, an eclipse or a
October,
full moon or
October has
wild.
an interesting,
Like a solar eclipse or something like that, I think.
October has an interesting thing going for it. Had a few people talk about it. I think CVO and Magic have talked to me about October as well.
Check this out. There is no hike. Just need to see how Powell sounds. Yep, that's for sure.
Yeah.
Good call, Patriot K, man. We appreciate you for throwing that out there. So no rate hike. I'm going to just go ahead and say that he is not trolling us here because he's a longtime watcher of the show. Appreciate you, K, man. Yeah, so we'll see what happens. I don't know.
Yeah, dude. Look, so right here on the more macro level of things, where is the annual PIV? Okay, here's the annual PIV. We were able to reclaim the annual PIV again yesterday and stay above it. So the day before on Monday, we got rejected. Yesterday, we got back above it. Now we're here once again. This is important because we've only been above it this few bit of time over here before we got rejected. But look at this. This looks a lot like here's the brush. It looks like a lot of a double bottom. Looks like two little booty cheeks right there. Little double bottom action that could definitely be leading us to a test here to pump us up. Double bottom could be it. This could be it. But the oscillator is not looking too great on the daily. Right? We are getting to that overbought territory, I should say. But anything's possible with Bitcoin. Things can stay irrational for a lot longer than needed. And if we get some good news here, things come out dovish, right? Maybe this is the turnaround. Maybe we don't go lower.
Well, hopefully we don't have to see any more ugly booty cheeks like that because definitely not going to be on OnlyFans. I'll tell you that. Or not getting any subs on OnlyFans with booty cheeks like that. That's for sure. All right, cool. Let's talk about what's happening with the SEC. SEC's got a couple things going on. And again, if you're just coming in, we don't generally stream at this time. We're going to be having Jay Powell come on here in a few minutes. We're going to let him say his piece, see what he has to say, see how he sounds. We'll comment on that afterwards. But before we do, let's talk about some other things that are happening in the crypto market. So let's start off with the SEC. The SEC crypto enforcement arm, the chief, says that there are more charges coming to exchanges and DeFi. We all know who that man is. They're Dirty Gary Gensler. The regulator's crypto enforcer made broad assertions that the SEC has more in store for the crypto industry. Still, David Hirsch acknowledged that the agency's current litigation load is heavy and the SEC can't go after everything. The SEC isn't done chasing down crypto exchanges and DeFi projects. It sees violating securities laws in the same vein as Coinbase Inc. and Binance, said David Hirsch, head of the agency's crypto assets and cyber unit. His enforcement office, which has been litigating at a very unusual pace for the SEC, is aware of and investigating other firms involved in much of the same activity seen at those two major platforms, and the industry's compliance breaches, quote, hold true well beyond any two entities, Hirsch said Tuesday at the Securities Enforcement Forum Central in Chicago. He said, we're going to continue to bring these charges, said Hirsch, who was the regulator of a number of businesses on its radar that are operating in similar ways to Coinbase and Binance. His agency is already embroiled in a number of complex crypto cases in federal courts, and as seen in its effort to appeal a recent Ripple ruling, not always with complete success. All right, so Crusader, we've talked about it a lot, but why is the SEC desperate for money, or is the SEC desperate to slow down this train? And that's what's happening here.
Dude, I don't even know if it's the SEC. There's so many people that have gone, don't know what happened to your camera there, but there's so many people that have gone against what the SEC is doing that I don't even think it's the SEC themselves. I think there's some bigger plan behind the scenes that is literally pushing the SEC to take this narrative because they know they're not winning. They know they're going to continue losing. It's not going to continue looking good. So somebody needs to be financing somewhere. This is my speculation, right? This is my piece of FUD here, is basically somebody has to be financing, in my belief, this movement for the SEC to stay stringent. Maybe it was with FTX bucks that they gave the different people
donation
power, money, right? Don't want to say which party or who or what, but somebody got paid, and I think they're using some of those FTX bucks to get SEC to continue financing this attack on crypto. right? There's also the narrative of maybe it's BlackRock. Maybe BlackRock wants the SEC to continuously come after crypto to keep prices low, keep the FUD going, right? However, which way possible, keep the price
I can see
suppressed.
that.
And then they're just stacking up. I don't know, man. So there's a lot of narratives, a lot of different people with a lot of agendas for a lot of different reasons why these low prices actually is beneficial to them.
I mean, stranger things have happened. BlackRock is actively, as you've probably heard us talk about on the show, they're actively manipulating the real estate markets, which is a multi-trillion-dollar industry. I don't even know how many trillions, but the real estate market is trillions and trillions of dollars, and they actively are playing in that market, as I know here in my hometown and many other towns, as they continue to set up these small little LLCs and effectively buy homes at over market price to drive the home rates, the average home price up, understanding that rates are up, people can't afford to buy the homes, boom, they rent them back to you. I had lunch with my dad today. He's a really smart guy. He's an attorney, but he used to do some securities laws, and we kind of talked about some of the things that are happening in the crypto space. He was asking me what's going on with crypto, this, that, and the third. He pays attention to it. He's got some crypto, but not heavy into it the way that we are. And he was just talking about how we have to be prepared for the fact that they are going to throw the kitchen sink at this, because it genuinely is, to them, a threat to what they know. So it's like coming at, if you only know your, let's just say that, okay, so in the past they've come after our families, right? They've said women go to work, right? It's time for you to go to work. They've got the men already working. They've got double taxable dollars. Now we take God out of the family. We insert the education system, and boom, we can then manipulate the upcoming generations, right? Well, this is kind of what's happening in the financial markets. They're basically trying to insert themselves into this new thing that is a threat to the old way of doing things, and saying, well, we can play with this out. We can play ball with this as well. And maybe this is just one of their ways that they're trying to do it. They're trying to flood the markets. They're trying to keep people guessing. We are by far, we talked about this yesterday on the stream, we are by far and away the largest in volume in the world, in crypto volume. Yet we are also way behind the curve as it relates to having any sort of clarity in the same market. So we have over $1 trillion in the market, and we have trillions of dollars of trading volume, of just volume in and out of the markets, yet no clarity. And I think that they want to keep it like that as long as possible, so that people just genuinely are guessing, So we'll see what happens. That's why we do streams like this. We like to see how Jerome Powell comes out. We like to hear not just what he says, but, as Patriot Caveman said earlier, how he says it. Because a lot of times you got to pay attention, like reading between the lines, right? You've got to really listen to what he's not saying while he's saying what is written down on a piece of paper for him, and all of the questions that are pre-screened, I guess I would say, that come his way. So we'll find out. Let me see what Jay Mills said over here. Jumping into the chat, Jay Mills said the Fed, SEC, FTX had a plan to take over crypto from the inside. Pretty obvious at this point. The plan failed. CZ screwed him. Gary is just fudding to keep prices. Yep. Yeah, I can see that. My only pushback on that would be, do you actually believe that CZ and well, let me ask you, Crusader, do you think that CZ, as an example, do you think that Brian Armstrong, as an example, do you think that, we know Sam Bankman-Fried was involved politically, right, in terms of donating money and pushing, basically he came from out of nowhere and all of a sudden was like the largest exchange for a little while. Do you think that people like CZ and Brian Armstrong are actually at the table in terms of having some of these discussions? Because it seems like they're going after them. You wouldn't think that they'd be engaging in conversations. Or do you think they tried to bring them to the table and they said, nah, we're not going to play ball?
See, I think there's different layers to the table. I think the table is, it's more of a restaurant, right? There's VP sections, there's different levels to it. I don't think all tables are built the same. So there's definitely the top table that runs everything, right? But there's smaller tables that, hedge funds, institutional people, big rich people that are behind the scenes come to, and they sit down and have conversations with, like CZ, with Brian Armstrong, and they might have had some deals, they might have had some things I just don't think they've been invited directly to the big all-time table, right? Whether you want to call that the deep state or you want to call that whatever, I don't know. I don't think they're at that level. I think they're some levels below, but they're definitely talking to important people. If not, they wouldn't be where they are, right? You think the Gemini twins aren't talking to important people and having big discussions on what's coming up? How did they know that Bitcoin was going to become the thing that it was going to become so many years ahead of time? Because they've talked about it, that they were going to these reunions, these retreats around the world every year and multiple times throughout the year, and meeting with all these important rich people, powerful people, and talking about Bitcoin, talking about, hey, this is coming, hey, this is happening. And they weren't the first ones. Somebody told them at one of those meetings, and then they escalated it out to other places. So they've admitted these meetings occur. Important people meet up, they talk about important stuff, and they slowly start building a plan for the future. So I definitely think, I just don't think they've been at that level.
Yeah, no, I agree. I think we even see it on a much smaller scale. Take for example, when we go to some of these events that we go to, right? We end up talking as influencers, though I hate that name. We end up talking to a lot of the different businesses on basically, okay, here's what's happening on the business side of things. How can we be able to work together to benefit each other, to be able to benefit your community, to be able to do things, bettering the space, right? So we get kind of an inside look sometimes at what's happening, maybe quote unquote behind the curtain with some of these businesses, in the same way that probably what you're saying is true, where they sit down, they have discussions, there's information that's being exchanged. And then I think the big piece that's missing is, do they have the link of the relationship? And I think that where that's gone sour is the SEC is just going after freaking everybody, right? They're like, we don't care. We're slowing this down no matter what. In these businesses, I could see as a business, if I owned Coinbase, if I owned Binance, if I owned any sort of an exchange or DeFi application or whatever the case may be, and you've got some basically bully on the playground that's trying to push everybody around, of course you're going to be like, well, wait a minute.
There's got to be a reason for it too. Like they just don't go this hard after something for no reason, unless, and especially when they're constantly losing, right? There has to be someone somewhere pushing an agenda, financing this movement for a certain reason. And just how we were talking about Coinbase, BlackRock partnered up with them to be the custodian or whatever for their ETF. Like, you think that just came out of surprise? BlackRock just announced that, and Coinbase was like, "Oh my God, we were selected." Those decisions and those discussions were being had. If Coinbase and these other companies weren't reaching out to these bigger companies, right, and having these dinner party meetings to plan ahead of time for this, if you don't believe that that's happening, you're not paying close attention.
Yeah, for sure. And speaking of Binance, first of all, smash the like if you haven't already. Again, special time to get today. We've got it pulled up. We're just waiting for it to start. Fed Chair Jerome Powell will be speaking here in about 5 minutes. So we will click over to that and watch that live as he comes out to see kind of what he has to say and how he has to say it. So stick around for that. But smash the like if you haven't. Make sure the bell notification's on. And just as a reminder, there was only a few people in earlier. Mondays and Thursdays are getting ready to change drastically, guys, and it's going to be fun. We have done some changes in the past, but I believe, Crusader, I'm going to guess you agree with this. I think this might be the best idea that we've, come up with. I think this is going to be a fun thing for you, the viewers, right? It's going to be fun for us as well, but I think the viewers, not only is it going to be fun, but once we kind of work out a few of the contractual kinks that we're working through right now, I think we're going to be able to offer some money to some of you as well, which I'm excited about.
I think it's going to change up the way YouTube people do YouTube content. We're going to be doing something that nobody in the entire space on YouTube is doing right now.
Nobody.
Which is going to be very different type of content, but very exciting and fun.
It's gonna be. I'm super freaking excited about it. I wish we could drop the alpha on you right now, but stick around. It's coming, and it's gonna come quick.
Still figure out some details.
We got a few details we're trying to figure out, but it's coming. There's nothing that's gonna stop this train either. Not even dirty Gary Gensler. Okay, Gary. Just in case you're watching, in case Gary's in the chat. Let's jump over real quick let's do these last two articles real quick. So before Gary comes on, and then we can talk about, before Gary comes on, before Jerome comes on, and then we can chat about what he says afterwards. So Binance, we were talking about Binance. Binance is answering some questions right now. Okay, let me scroll up here. Binance US answers SEC questions on mysterious money movements. Now there was a retracted part in this. I'm gonna change it right now. But it says CZ made a $250 million loan to BAM Management US Holdings, $183 million of when it was transferred to BAM, trading by Paxos, the New York-based issuer of BUSD, according to court documents unsealed. One day after the SEC hit Binance with a massive lawsuit, the Binance US legal team filed responses to questions from the regulator about specific financial maneuvers, according to unsealed June 6 court documents. Now, let me scroll down because it's at the bottom. It said, the story said that Binance borrowed $250 million. It's incorrect. He lent the $250 million to the company. So basically some money was being moved around between a couple of their different companies. And I understand that all of this is public, but for them so $250 million versus a multi-billion-dollar exchange is like, okay, like, yeah, there's money being moved around, but these are big time players. They are paying attention and scrutinizing every freaking thing. This is another example of the SEC wanting to know, where am I getting my tax money, homie? I mean, ultimately, the SEC is paid for by U.S. tax dollars. They're saying Binance US. They're saying you're moving. Effectively, when you read the article, they were suggesting that they were basically obfuscating funds or moving funds around in a way that would allow them to not pay out their fair share to the U.S. Well, let's be fair. Now, I don't know all of the details of this, so I'm just speculating here, but the tax laws are written in a way for a reason, and they're put out there for us to take advantage of them. And so if him loaning $250 million to another company, right, as a liability allowed him to do that, guess what? Unless there's something we're not seeing, legal move. You guys made the tax code. We're just playing by the laws. And I just think this is another reach from the SEC, again, trying to, just continue to do what we're talking about, fudding, and trying to just create doubt around these markets. So let me hear in the chat real quick. Well, let me hit this. What's Steve-O asking? Maybe I shouldn't have pulled this up. Oh, shoot, I shouldn't have pulled this up. Keeper, what do you think about Ben Armstrong asking for donations from his fans to help pay his legal expenses? I will say, Crypto Steve-O, that Ben is a good friend of mine, good friend of Crusaders. We're close with him, love him. We're wishing him the best. He's got a long uphill battle, as it seems. And I will just say, from a personal side of things, you guys don't know all the information. So we're just praying for him and hope that he continues to, figure this out. So I'll just leave it at that. So chat, let's ask the chat. What are your thoughts as I pull this up? What do we think the Fed move is going to be here? Is he going to be hawkish or dovish? Put a 1 if you think he's going to be hawkish. Put a 2 if you think he's dovish. Crusader, hawkish or dovish?
Dude, I think he's going to be dovish, bro. I'm going to share my screen and I'm going to keep it up so people can see the chart.
Get up.
Let's see if it pumps or dumps. I think it might pump a little bit, dude. I mean, I'm seeing here, right? I don't know nothing about TA.
Put it on like a 1 minute so that we can actually see it move.
But I'm seeing a little bit of a little double bottom
scenario. Oh, another ugly butt?
Okay, that's right. That's right, dude. Another little ugly butt cheeks over here. And then we're seeing this little double bottom. By reclaiming the value area low, we've been pumping up. We're still respecting this trend line. If we can break above this daily open and stay above it, I think that could lead us the way, especially if we reclaim the value area high and we cross that 27,354. I think it's off to the races then, and it's not a long. This right here, the daily open is 27.1, basically 27.2. So 27.3 is not far from it. That is a quick move, I think. And open interest has been climbing a lot. Look at this massive bar of open interest coming in, meaning people are flowing into this price point. And the way open interest works is as this rises.
I hate to cut you off.
Go ahead.
Do you want to finish that or you want me to pull it? Yeah, it started. You want me to do it?
Yeah. I'm just going to finish up. As this rises, depending on the trend, we'll make it stronger or weaker. Trend now is to the upside. This is rising, looking bullish.
Boom. Let's get it.
Is he talking?
Stability. We will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We've raised our policy interest rate by 5.25 percentage points and have continued to reduce our securities holdings at a brisk pace.
Put it on the 1 minute.
We've covered a lot of ground, and the full effects of our tightening have yet to be felt. Today, we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings.
Okay.
Looking ahead, we're in a position to proceed carefully in determining the extent of additional policy firming that may be appropriate. Our decisions will be based on our ongoing assessments of the incoming data and the evolving outlook and risks. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace, and so far this year, growth in real GDP has come in above expectations. Recent readings on consumer spending have been particularly robust. Activity in the housing sector has picked up somewhat, though it remains well below levels of a year ago, largely reflecting higher mortgage rates. Higher interest rates also appear to be weighing on business fixed investment. In our Summary of Economic Projections, or SEP, committee participants revised up their assessments of real GDP growth.
Here we go.
With the median for this year now at 2.1%. Participants expect growth to cool, with the median projection falling to 1.5% next year. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 150,000 jobs per month, a strong pace that is nevertheless well below that seen earlier in the year. The unemployment rate ticked up in August, but remains low at 3.8%. The labor force participation rate has moved up since late last year, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers.
I see that.
FOMC participants expect the rebalancing in the labor market to continue, easing upward pressures on inflation. The median unemployment rate projection.
I wish I was this good at TA when I'm actually trading.
At the end of this year,
I'm only good when I don't have money on the line.
The next 2 years. Inflation remains well above our longer run goal of 2%.
Uh-oh.
Well, he was too dovish. They started to cut his stream.
4% over the 12 months ending in August, and that excluding the volatile food and energy categories, core PCE prices rose 3.9%. Inflation has moderated somewhat since the middle of last year, and longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Nevertheless, the process of getting inflation sustainably down to 2% has a long way to go.
No kidding.
The median projection in the SEP for total PCE inflation is 3.3% this year, falls to 2.5% next year, and reaches 2% in 2026. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation.
And energy.
We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5.25 percentage points. We see the current stance of monetary policy as restrictive, putting downward pressure on economic activity, hiring, and inflation. In addition,
what the heck? Come on, bruh.
The economy is facing headwinds from tighter credit conditions for households and businesses. Range for the federal funds rate at 5.25 to 5.5%, and to continue the process of significantly reducing our securities holdings. We are committed to achieving and sustaining a stance of monetary policy that is sufficiently restrictive to bring inflation down to our 2% goal over time. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.6% at the end of this year, 5.1% at the end of 2024, and 3.9% at the end of 2025. Compared with our June summary of economic projections, the median projection is unrevised for the end of this year, but has moved up by a half percentage point at the end of the next 2 years. These projections, of course, are not a committee's decision or plan. If the economy does not evolve as projected, the path of policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. Given how far we have come, we are in a position to proceed carefully as we assess the incoming data and the evolving outlook and risks. Real interest rates now are well above mainstream estimates of the neutral policy rate, but we are mindful of the inherent uncertainties in precisely gauging the stance of policy. We're prepared to raise rates further if appropriate, and we intend to hold policy at a restrictive level until we're confident that inflation is moving down sustainably toward our objective. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We remain committed to bringing inflation back down to our 2% goal and to keep.
Good Lord.
Not looking good. Bitcoin price going down. It's going down. Uh-oh. Oh, God.
Well,
bearish engulfing candle. It's
essential
over. The rally's over.
Set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you.
Oh, we're crashing hard. Get ready, baby. We're going all the way to this value area low. Here we go.
Thank you. Colby Smith with the Financial Times. What makes the committee inclined to think that the Fed funds rate at this level is not yet sufficiently restrictive, especially when officials are forecasting a slightly more benign inflation outlook for this year? There's noted uncertainty about policy lags. Headwinds have emerged from the looming government shutdown, the end of federal childcare funding, resumption of student debt payments, things of that nature.
So I guess I would characterize the situation a little bit differently. So we decided to maintain the target range for the federal funds rate where it is at 5.25% to 5.5%, while continuing to reduce our securities holdings. And we say we're committed to achieving and sustaining a stance of monetary policy
Bitcoin
that's sufficiently restrictive to bring
down. It's sinking. Look at this thing. Oh my God.
But the fact that we decided to maintain the policy rate at this meeting doesn't mean that we've decided that we have or have not at this time reached that stance of monetary policy that we're seeking. If you looked at the SEP, as you obviously will have done, you will see that a majority of participants believe that it is more likely than not that it will be appropriate for us to raise rates one more time in the 2 remaining meetings this year. Others believe that we have already reached that. So it's something where we're not making a decision by deciding to about that question by deciding to just maintain the rate and await further data.
So right now, it's still an open question about sufficiently restrictive. You're not saying today that we've reached this level.
We're not saying, no. Clearly, we are just, what we decided to do is maintain the policy rate and await further data. We want to see convincing evidence, really, that we have reached the appropriate level, and we're seeing progress, and we welcome that. But we need to see more progress before we'll be willing to reach that conclusion.
And just on the 2024 projections, what's behind that shallower path for interest rate cuts and the need for real rates to be 50 basis points higher?
Right. So I would say it this way. First of all, real interest rates are positive now. They're meaningfully positive. And that's a good thing. We need a policy to be restrictive so that we can get inflation down to target, okay? And we're going to need that to remain to be the case for some time. So I think, remember that of course, the SEP is not a plan that is negotiated or discussed really as a plan. It's accumulation really, and what you see are the medians. It's accumulation of individual forecasts from 19 people, and then what you're seeing are the medians. So I wouldn't want to, bestow upon it the idea that it's really a plan. But what it reflects, though, is that economic activity has been stronger than we expected, stronger than I think everyone expected. And so what you're seeing is this is what people believe as of now will be appropriate to achieve what we're looking to achieve, which is progress toward our inflation goal, as you see in the SEP.
Thanks. Let's go to Rachel.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. How would you characterize the debate around another hike or holding steady? Is it discussion around lag times, fear of too much slowing, too little slowing? Could you walk us through what this disagreement was about at the meeting?
Yeah, so the proposal at the meeting was to maintain our current policy stance. And I think there was obviously unanimous support for that. But this, of course, is an SEP meeting, and so people write down what they think. And you have some, you saw, I think 7 wrote down no hike at this meeting, or between now and the end of the year, and I think 12 wrote down another single hike in one of the next 2 meetings that we have between the end of the year. So it wasn't like we were arguing over that. People just stating their positions. And really what people are saying is, let's see how the data come in. We want to see, what we want to see. We want to see that these good inflation readings that we've been seeing for the last 3 months, we want to see that it's more than just 3 months, right? We want to see, the labor market report that we received, the last one that we received, was a good example of what we do want to see. It was a combination of across a broad range of indicators, continuing rebalancing of the labor market. So those are the 2 things. Those are our 2 mandate variables, and that's the progress that we want to see. But I think people, they want to be convinced, they want to be careful not to jump to a conclusion really one way or the other, but just be convinced that the data, support that conclusion. And that's why, given how far we've come and how quickly we've come, we're actually in a position to be able to proceed carefully as we assess the incoming data and the evolving outlooks and risks and make these decisions meeting by meeting.
And in your view, I know nothing has been decided yet, but what would one more hike at the end of the year do to the economy or to inflation? And on the other side, what would no hike do, if you could sort of game that out for us?
So, you can make the argument that one hike one way or the other won't matter, but for us, we're trying, obviously as a group, it's a pretty tight cluster.
Trying not to break the
where
banks.
we think that policy stance might be, but we're always going to be learning from data.
While breaking all of our
We've learned
banks.
all through the course of the last year that actually we needed to go further than we had thought. If you go back a year and what we wrote down, it's actually gotten higher and higher. So we don't really know and that's why, again, we're in a position to proceed carefully at this point. A year ago, we proceeded pretty quickly to get rates up. Now we're fairly close, we think, to where we need to get. It's just a question of reaching the right stance. I wouldn't attribute huge importance to one hike in macroeconomic terms. Nonetheless, we need to get to a place where we're confident that we have a stance that will bring inflation down to 2% over time. That's what we need to get to, and we've been moving toward it. As we've gotten closer to it, we've slowed the pace at which we've moved. I think that was appropriate.
It's still month over month
And
going
now that we're
up,
getting closer,
just to be clear for
we
everybody.
have the ability to proceed carefully.
Yeah, inflation is not coming down. Just the rate.
Just the rate at which it's going up.
So big. And they remove energy from it. They don't have energy on the CI or food.
View of the inflation dynamic in the economy, that you achieve the same forecast inflation rate for next year, but need another 0.5 point of the funds rate on it. Does it tell us that the committee believes inflation to be more persistent requires more medicine effectively. And I guess a related question is, if you're going to project a funds rate above the longer run rate for 4 years in a row, at what point do we start to think, hey, maybe the longer rate or the neutral rate is actually higher? Thank you.
Okay.
So,
give them a little bit of pushback.
I guess I would point more to, rather than pointing to a sense of inflation having become more persistent, I wouldn't think that's not, we've seen inflation be more persistent over the course of the past year, but I wouldn't say that's something that's appeared in the recent data. It's more about stronger economic activity, I would say. So if I had to attribute one thing, again, we're picking medians here and trying to attribute one explanation, but I think broadly, stronger economic activity means rates, we have to do more with rates, and that's what that meaning is telling you. In terms of what the neutral rate can be, you know, we know it by its works. We only know it by its works, really. We can't, you know, the model and that the economy reacts. And again, that's another reason why we're moving carefully now, because, you know, there are lags here. So it may of course be that the neutral rate has risen. You do see people, you don't see the median moving, but you do see people raising their estimates of the neutral rate. And it's certainly plausible that the neutral rate is higher than the longer run rate. Remember, what we write down in the SEP is the longer run rate. It is certainly possible that you know, that the neutral rate at this moment is higher than that, and that that's part of the explanation for why the economy has been more resilient than expected.
Let's go to Howard.
Howard Schneider with Reuters. Thank you. So you've said several times that the economy needed a period of below trend growth to get inflation consistently back to 2%. You kind of get that in 2024, a little bit. 1.5% is just a touch below what's the estimate of potential. So the fact that you're getting so much done at so much less cost, does that represent a change in how you think inflation works, a change in how you think the economy works, a change in the mix of supply healing versus demand destruction that's necessary to achieve this?
Yes, of course, it is a good thing that we've seen now meaningful rebalancing in the labor market without an increase in unemployment. And that's because we're seeing that rebalancing in other places, in, for example, job openings and in the jobs worker gap. You're also seeing supply side things. So that's happening. I would say, though, I still think, and I think broadly people still think that there'll have to be some softening in the labor market. That can come through more supply, as we've seen as well. Also, remember, the natural rate we think is coming down, which is a supply side thing, so that the gap between any given unemployment rate that's lower than that and the natural rate comes down. That's a way for supply. That's a way for the labor market to achieve a better balance. So
it's not looking good for Bitcoin, dude.
You're right. In the median forecast, we don't see a big increase in unemployment. We do see an increase, and but that really is just playing forward the trends that we've been seeing. That is not guaranteed. There may come a time when unemployment goes up more than that, but that's really what we've been seeing, is progress without higher unemployment for now.
So just to boil that down for a second, you know, we've gone from a very narrow path to a soft landing to something different. Would you call the soft landing now a baseline expectation?
No.
The soft landing is not happening. It didn't happen.
I would just say, what would I say about that?
It's amazing that they're still
I've
using
always
that
thought
term.
that the soft
Soft
landing
landing.
was a plausible outcome, that there was a path, really, to a soft landing. I've thought that, and I've said that since we lifted off. It's also possible that the path is narrowed and it's widened, apparently, ultimately.
And we bounced hard.
This may be decided by factors that are outside our
They
control
kept
at the end
bouncing.
of the day. But I do think it's possible, and you know, I also think. You know, this is why we're in a position to move carefully again, that we will restore price stability. We know that we have to do that, and we know the public depends on us doing that, and we know that we have to do it so that we can achieve the kind of labor market that we all want to achieve, which is an extended period, sustained period of strong labor market conditions that benefit all. We know that. the fact that we've come this far lets us really proceed carefully, as I keep saying. So I think, that's the end we're trying to achieve. I wouldn't want to handicap the likelihood of it, though. It's not up to me to do that.
Nick Timmeros of the Wall Street Journal. Chair Powell, both you and Vice Chair Williams have indicated that sufficiently restrictive will be judged on a real rather than nominal basis, implying some scope for nominal rate cuts next year, provided further compelling evidence that price pressures will continue to subside. Is the FOMC focused on targeting a real level of policy restriction? And can you explain what would constitute enough evidence that will allow the FOMC to normalize the nominal stance of policy while keeping real policy settings sufficiently restrictive?
Good Lord.
Yes, we understand that it's a real rate that will matter and that needs to be sufficiently restrictive. Again, I would say you know sufficiently restrictive only when you see it. It's not something you can arrive at with confidence in a model or in various estimates. And so what are we seeing? We're seeing, through a combination of the unwinding of the pandemic-related demand and supply distortions and monetary policy's work in suppressing demand or alleviating very high demand. The combination of those two things is actually working. You're seeing, inflation coming down. It's principally now in goods, also in housing services. You begin to see effects of it in non-housing services as well. So we think that is working. And I think as we've said, we want to reach that. We want to reach something that we're confident it gets us to that level. And I think confidence comes from seeing, enough data that you feel like, yes, okay, this feels like we can for now decide that this is the right level and just agree to stay here. We're not permanently deciding not to go higher, but we would, let's say, if we get to that level. And then the question is, how long do you stay at that level? And that's a whole other set of questions. For now, the question is trying to find that level where we think we can stay there. And we haven't gotten to a point of confidence about that yet. That's the stage
this year. And even then, it seems possible that core PCE inflation could come in even lower than the median at 3.7%. Would you see a case to raise rates still if it turned out that you were going to achieve the same real rate this year because the decline in inflation proceeds somewhat better than you currently anticipate?
The decision that we make at
At Sherwin-Williams, we make the color decision easier with free homeowner advice from our color experts.
Are you freaking serious right now?
We'll take that off screen until they're back. In the meantime, let me tell you,
it's over.
Not looking too bueno, my amigo. We hit some VWAP resistance up here. Swing failed that. Came right down.
To the level that we need to get to.
Ugly.
Mm-hmm.
Thanks, Chair Powell. Following up on Nick's question, actually, John Williams, the New York Fed president, obviously, has said things to the effect of next year as we see inflation, kind of, again, to Nick's point, as we see inflation coming down, we're going to need to reduce interest rates to make sure that we're not squeezing the economy harder and harder over time. And I wonder if that's basically the logic that you apply. Is that how you think about it? And then I also wonder, in the last press conference, you said something to the effect of, it's a full year out, those discussions, and people interpreted that to mean that you didn't see a possibility of a rate cut in the first half of next year. And I wonder if that was what you meant by that, or whether, how you're thinking about that timing.
No, when I answer these questions about hypotheticals about cutting, I'm never intending to send a signal about timing. I'm just answering them as the question is expressed. So please, I wouldn't want to be taken that way. Sorry, the first question was that how? Yeah, so we're, as we go into next year, that's the question we'll be asking is, taking into account lags and everything else we know about the economy and everything we know about monetary policy. The time will come at some point, and I'm not saying when, that it's appropriate to cut. Part of that may be that real rates are rising because inflation is coming down. Part of it just may be that It'll be all the factors that we see in the economy. And, you know, that time will certainly come at some point. And what you see is us writing down, you know, a year ahead estimates of what that might be. And, you know, there's so much uncertainty around that. When we, in the moment, we'll do what we think makes sense. No one will look back at this and say, hey, we made a plan. It's not like that at all. These are estimates made a year in advance that are highly uncertain, and that's how it is.
They're just waiting until the Bitcoin halving
Neil Irwin
next
with
year
Axios.
for the next bull
How
run.
do you think about the question of whether the strong GDP growth that we've been seeing is driven by excess demand versus supply side factors, productivity, labor force growth? And relatedly, if GDP keeps coming in hot, even in the absence of inflation resurgence, would that on its own be a reason to consider more tightening?
So on your first question, I mean, we're looking at GDP very, very carefully to try to understand really what's the direction of it, what's driving it, and it's a lot of consumer spending. You know, the consumer's been very robust in spending. So that is, you know, that's how we're looking at it. Sorry, your second question was?
There's GDP stays hot, but without inflation.
So I think the question will be, GDP is not a mandate, right? Maximum employment and price stability. The question will be, is GDP, is the heat that we see in GDP, is it really a threat to our ability to get back to 2% inflation? That's going to be the question. It's not a question about GDP on its own. It's you know, you're expecting to see this improvement, you know, continued rebalancing in the labor market and inflation moving back down to 2% in a sustainable way. We have to have confidence in that, and you know, we'd be looking at GDP just to the extent that it threatens one or both of those.
Victoria. Hi, Victoria Guida with Politico. There are multiple external factors that are playing out right now. We see rising oil prices. We see auto workers striking. There's the looming, very real possibility of a government shutdown. And I was just wondering, for each of those things, could you talk about how you're thinking about?
I'm glad the girl behind her is double masked. She's got to be safe for everybody.
There's a long list, and you hit some of them. But you know, it's the strike, it's government shutdown, resumption of student loan payments, higher long-term rates, oil price shock. You know, there are a lot of things that you can look at. And you know, so what we try to do is assess all of them and handicap all of them. And ultimately, though, there's so much uncertainty around these things. I mean, to start with the strike, first of all, we absolutely don't comment on the strike, as we have no view on the strike one way or the other. But we do have to make an assessment of its economic effects to do our jobs. So, you know, the thing about it is so uncertain. It will depend. The economic effects, it could affect, we've looked back at history, it could affect economic output, hiring, and inflation. But that's really going to depend on how broad it is and how long it's sustained for. And then it also depends on how quickly production can make up for lost production. So none of those things are.
This has been one of the more boring meetings
to know. So you just have to leave that uncertain, and we'll be learning, I think, over the course of the next intermeeting period. It hasn't traditionally had much of a macroeconomic effect. You know, energy prices being higher, that is a significant thing. Energy
but we don't
prices
count for it.
Can affect spending. It can affect.
It's very important.
Over time.
Well, we don't count it because that would be terrible news for you guys.
Can affect consumer expectations about inflation. We tend to look through short-term volatility and look at core inflation.
Short-term.
So the question is, how long are higher prices sustained? We have to take those macroeconomic effects into account as well. Those are some of them. I'm not sure if I hit them all, but I mean, ultimately, you know, you're coming into this with an economy that appears to have significant momentum, and that's what we start with. But we do have this
momentum to the downside.
Torres from Bloomberg News. I was a little surprised, Chair Powell, to hear you say that a soft landing is not a primary objective. This economy is seeing added supply in a way that could create long-term inflation stability. We have prime age labor force participation moving up where people can add skills. Workers want to work. We have a boom in manufacturing construction. We've had a decent spate of home building. And since inflation's coming down with strong GDP growth, we may have higher productivity. All are which good for the Fed's longer run target of low inflation. And if we lose that in a recession, aren't we opting for the awful hysteresis that we had in 2010? So are you taking this into account as you pursue policy? Thank you.
To begin, a soft landing is a primary objective, and I did not say otherwise. I mean, that's what we've been trying to achieve for all this time. The real point, though, is the worst thing we can do is to fail to restore price stability, because the record is clear on that. If you don't restore price stability, inflation comes back, and you go through what you can have a long period where the economy is just very uncertain, and it'll affect growth, it'll affect all kinds of things. It can be a miserable period to have inflation constantly coming back and the Fed coming in and having to tighten again and again. So the best thing we can do for everyone, we believe, is to restore price stability. I think now, today, we actually, we have the ability to be careful at this point and move carefully, and that's what we're.
Do we want to keep listening to this full talk, or we just want to talk about it?
We fully appreciate it.
Stop it.
Yeah, let's just talk about it, right? They're talking about price stability. They're talking about doing all these things, but in reality, they're just biding time. They're not. There is no soft landing coming, right? They've been telling the same story for the last 2 years. Soft landing is not coming. The economy is going down. Fun statistic that we haven't talked about, but I did talk about in the video I posted earlier today. So if you haven't watched it, go watch that video. Did you know that we added $1 trillion to our national debt within 3 to 4 months this year?
It doesn't surprise me, but
we hit 32,000 in June.
32 trillion?
32 trillion, and now we're at 33. So in like 3 to 4 months after the ceiling raise, we just added another trillion. You know how long it took to get to the first $1 trillion in national debt?
A long freaking time.
140 years.
We just hit in 3 or 4 months.
And we hit a new trillion in 3 or 4 months.
Yeah.
And yet they're still talking about soft landing, inflation coming down, US dollar, the momentum of the economy. Where is it headed? Only to the downside. That's why they removed things from the CPI basket of certain things that don't correlate to their story, to their narrative, like energy, like food. Right? Food is still rising. You're seeing shrinkage of packaging of items to keep same prices. You go to restaurants. I've been going to restaurants that I tend to go to the same restaurants all the time. If it ain't broke, don't fix it. Right? That's the type of person I am when I go out to eat. And I've noticed the portions are getting smaller. Mm-hmm. Same prices, but the portions are getting smaller. So
yeah, let's talk on a real simple, just understandable way to talk about this. And I think everybody in the chat will be able to relate to this. So you've got to look at, and you'll hear people say that small businesses run the United States. Okay, that is basically who runs the United States. Well, let's look at small business owners.
Differently.
Small business owners are going to the same stores that you're going to. Okay. They're spending the same crazy money that you are on all sorts of different things. And you've heard me talk about this before. Well, what does that do? So that hurts the small business owner's pockets. The small business owner is dealing with the same problems that you are. That is the same small business owner that you might go to get some work done, or to have, show up for any number of different things. You always hear me talk about construction, but anything, doesn't matter. That's who you're going to. And so what are you seeing happening? Well, everything is going up. Well, why is it going up? Because they're trying to cover themselves from the hurt that they have. Then flip it around. Now you have customers that would normally go to these small business owners for work. And they really can't right now, because when they see the prices of what the small business owners are charging to be able to keep up, well, they can't pay it because they can't even keep up with the same things that they're spending money on. So this is really, really simple on a base level. It's like, hey, everything is so out of control right now that shit just continues to roll downhill. And you start with big business, and they're taxing the heck out of you and killing you to be able to keep up. Then medium-sized businesses, they're killing the smaller businesses. And the smaller businesses are killing the average person. And the average person, that hires somebody to work for them can't pay as much, because of what's happening in our economy. So I think it's actually a really simple idea of why we are not headed for a soft landing, and why all of this is exactly like you said, kicking the can down the road, trying to rub people's backs when we know the reality of the situation. We're screwed, dude. I mean, it's ugly and it's going to get worse.
Yeah. So listen to this, right? This is the summary of the decision. No, right? This is being left unchanged. There's no hike to the interest rate. 12 Fed officials see one more rate hike. 7 officials see no more rate hikes. The Fed sees rate hikes higher for longer, right? So they're saying, hey, we're going to be at this high rate for a long time, possibly even, they said, to September of 2024. Then the Fed says sees inflation at 2.6 in 2024. So what do we think? What do you think about this, Keeper? Do you think that this is a delay tactic to not admit that the money printer is going to be turned on soon, and just like, well, we're just going to sit here for the next year? We know that banks are hurting, right?
Oh yeah.
They can't keep up. Four or five of the largest banks collapsed earlier this year. People already forgot about that. They got amnesia, right? With the new thing coming out, people just instantly forget it, memory wipe. So now, where are we headed? Are we gonna see the money printer turn on in 2024, or
I think so.
do you think that he's gonna stay strong and just?
I think it's going to have. I think it's almost going to have to come on. And I'll tell you the main reason why I think it's going to have to come on, because something drastic is going to have to happen around election time, and it always does. They've got to find a way to prop up the stock market. They've got to find a way to make sure that things look better economically. They've got to find a way to bring some of these gas prices down. They've got to find a way to make things feel better when they're trying to buy your vote. And we've seen it time and time and time and time again, that things magically just start to, quote unquote, get or feel better during an election year. And guess what next year is? It's an election year. Combined with all the problems that we're having, I don't know of another way besides, and this is something that we've talked about a lot, them figuring out some schemy way to bring out the CBDC in the meantime and tell you how great it's going to be and the things that it's going to make more convenient for you and allow you this, quote unquote, breathing room that's not going to be real either. And they're going to be able to manipulate those markets, that money, the same way that they're able to manipulate the money now.
Yeah, by the way, heads up, just got some insider information. Yeah, Bitcoin's going down. But outside of that, I agree, dude. I think, but here's a contrarian thought. What if, right, we're expecting things to get better for the election cycle, right, of next year of 2024. We're going to be voting for the next president. But it seems like they don't want the current administration to go for another round, right? There's some impeachment process going on. There's a lot of things happening. A lot of the blue team has been coming out against their leader, right? And they've been kind of turning their backs on them, right? So what if they actually don't want things to look better and they want things to just kind of look equally as bad as before, so that there is no clear winner? So there is no like, hey, people are fearful, right? Things are bad. Things are not going to be looking good in the year. So, maybe that's the purpose. Maybe
so
that's
things are just
reason.
ugly all
things
the way,
are just ugly all around. Nobody's excited about the voting process because things are so bad, and there's no real, person that sticks out as a person that can save the country from where it's headed.
Yeah, well, I mean, you would think that things could only get better from here, but I've got news for you. I think that they are going to get worse.
Yeah.
And also a lot of these, we talk about on trading lagging indicators, all the things that they're talking about and the reasons that they give you, that they can't just give you a solid, hey, here's where we're going and here's when we're going to do it. There's a couple reasons, but the main reason is, and they're not lying about this, they don't know. They genuinely, they know the direction. They know that we have problems. They know that these are issues. And they knew before they started flipping on the money printer, going wild with it, what it was going to do, because it's simple economic supply and demand. You start pumping a bunch of liquidity in that was, not there before. It's going to devalue. It's going to debase your currency. Okay, so they knew that. But ultimately, you don't feel the effects until farther on down the road. Interest rates have been going crazy. I'll give you an example. I have a small business loan that started off, I don't remember when I got it. It's not a large amount, but it started at 5.25. And I asked when I got the loan, hey, is this variable versus the federal funds rate? And he said, well, yeah, it has to be. I said, okay. This was not that many months ago. Care to take a guess at what that's at? I got the mail this morning.
What was it? You said 5% when you first got it?
5 or 5 1/4, something like that. Yeah.
Probably close to like 8% by now.
It's 9.
Oh, good
it's
Lord.
at 9%. Every time I get the mail every month showing the balance on it, it's going up 0.5 point,
dude,
1/4 point, 0.5 point.
Imagine credit card debt.
Dude, the credit card debt is absolute insanity right now.
The rates for
have you seen them?
Cards,
like 36% or something? Dude, I've seen some wild numbers.
Bro, the rates are like in the 20s percentile, right? And now with these interest rates keep going up these last 2 years, they're only going to get worse and worse, and the debt just piles on.
It's the same business idea. This is that the big business is paying higher rates for everything that they're doing. They're paying their employees more. Their interest rates are higher for what kind of collateral and whatnot they're holding. Everybody's getting hammered by this, and it, like I said, it just rolls downhill. And ultimately, at some point, the house of cards falls, and we've talked about this. It's not just the dollar; it's just people in general can't continue to do this. I see. I don't know. I see the writing on the wall.
As the dollar falls, Bitcoin rises, right?
Yeah. Well, so you better have a lot of Bitcoin. Okay.
I'm just saying, with Bitcoin, all rising tides
usually
all boats, right?
Usually,
when it comes into the crypto space. So as Bitcoin rises, the altcoins will rise too eventually along with it. So even if we do see, so like let's start like summarizing here a little bit, like not being fully negative. So like let's look at the worst case. They said 2024, there's no interest rate cut until 2024, September of 2024.
Okay.
With that being said, even if that were to be true, and we have a whole nother full year from this day right now of high level interest rates, whether we raise them up a little bit more or we stay at this level.
Yeah.
That lines up perfectly, right? Because next year in April, we're going to have the Bitcoin halving.
Yep.
Then fast forward another 8 months, another 4
and usually it takes
months.
time. It takes time.
It's a lagging thing, right? The halving doesn't happen and Bitcoin just flies off the handle. It takes time to build up, right? We start entering September. Maybe we get our first rate cut, right? We enter the presidential election. Boom, we get that. There's always somewhat of a bit of a rally in the stock market, especially if it's favorable to one side or the other, and people are happy with the decision. And you see a rally into December, January kind of scenario, which then leads us to 2025, closer to that Bitcoin 4-year cycle full bull run status. Are the stars aligning here? It might not be ideal. It might not be the now that we want, right? We want it to go now, but is it actually lining up to have a decent rally?
I think part of the problem, though, is because people are going to be so tight in between now and then and not be able to continue to add liquidity. Most people are not going to be able to just continue to buy Bitcoin while these prices are down. I think that's part of the problem right now. The institutional investor is a different ball game than you or I, right? We're just market participants, and we just they don't really care exactly what we do. But the reality is we care. We care what our followers are doing. We care what our subscribers are doing. We want you guys to succeed. If things are just absolutely killing you at home, how do you have extra money to be able to continue to capitalize on this long-term run?
Credit cards and loans, baby, and load them up on crypto.
Don't start telling them that.
I'm not telling them. I'm just saying
interest rates are through the roof. Credit cards are going crazy. Get more and buy Bitcoin, baby.
What's the worst that can happen, right? This is my game plan. I've been thinking about it, right? I'm not employed right now. If things get bad in the crypto space, especially if we have a really good dip in the market, I'm thinking about pulling out credit cards. I'm thinking about pulling out loans and buying some more. Right, because instead of using my fiat that I've saved up, right, in case of a rainy day, I'm just gonna use the bank's money. Because
ready to take one on the chin for the team. Little like bankruptcy action, but I got a lot of Bitcoin hiding somewhere.
Exactly. What's the worst, right? I go bankrupt. I have to declare bankruptcy or something, right? Because long story short, everybody goes bankrupt. The economy's bad, right? Multi-million-dollar businesses go bankrupt. Obviously, this is not financial advice. This is not the way to do it. But I'm just saying, realistically, what's the worst that can happen?
Yeah. I mean, the worst that could happen would be it all goes horribly wrong, and then Bitcoin, for whatever reason, doesn't do what you want to do.
Bitcoin doesn't hit the 4-year cycle. There is no bull run. There's like 10 years, and there's a Great Depression along. But then if there is a Great Depression, and there is no more Bitcoin bull cycle.
Yeah, we got more problems than
Everybody's gonna be lining up for the bread lines anyway. So it's just gonna be like, hey, bro, I tried to hit it with Bitcoin. I missed.
That's right. I missed on the pull on the freaking Bitcoin slot machine. Crypto fam, we don't want to be negative. We just know where things are headed, right? This is ugly. It's probably going to continue to get a little bit uglier. I wouldn't say that he was hawkish, but I wouldn't say he was dovish either. I think that he was basically saying, hey, we kind of just see the writing on the wall, and we'll continue to keep you updated.
He was mid.
He was mid. Oh, you know what I did? I have heard that recently. He was mid. Yeah. And so do we want to see obviously anything possible that we can to see crypto pump? Absolutely. Do we want to see everybody in the chat have the opportunity to continue to dollar cost average into, or however it is that you get into your positions and assets? Absolutely. But the facts are, it's tough right now. I will tell you, even just personally for me, I have had to look very closely at liquidating some of my crypto positions to be able to continue to press forward in other ventures and things that we are doing. It's just and this is not the time to do it. It is not the time to do it. But there's just, sometimes it comes to a head and you're like, what else am I going to do here? I might have bought myself a little too much crypto. And I don't think you can ever have too much.
Dude, we're dumping.
We are dumping hard. Yep. Are we down below 27 yet?
Yeah. No, we're about to break below 27.
We're at 27,064. 061.
Yeah, we just lost the value area low, and now the dump is coming in hard. We're gonna keep going.
Well, I think I just think he, was just continuing to put out there that hey, we have no freaking idea, but it ain't looking good. I mean, that's effectively what I got out of the meeting, and they can continue to tell. They can continue to tell you, that, well, we could have this. Listen, people read right through that. People on our show, on other people's shows.
Oh boy! Look at this thing. Look at this thing, bro.
Oh boy!
Oh my god!
Oh boy! It's a wick as for now, but I don't know.
For now,
what are you on? You're on a 3-minute chart. I can only imagine what that 1-minute chart looks like. Let me see that 1-minute chart.
Oh, it is on in 1 minute. It's literally dropped in 1 minute.
This is ugly. Yeah, crypto fam.
Oh, so God, here we go. It's still happening. Previous week low. Here we come. Previous week high. I mean, here we come.
Listen.
Oh my God.
Oh my Lord. God. You guys are seeing it here live.
Oh my
it's
God.
It's over. Bitcoin to zero. It's going.
Previous day low, dude. 26.65. That's next, bro. We're at this rate. We're going. We are going. Look at this massive open interest reversal. This is a massive reversal sign. Oh my God. Look at this thing. It is sinking like the Titanic, bro. Holy smokes.
Crypto fam, listen, we're having a laugh only because we're
gonna buy this thing on loans, baby.
What else can you do, right? Sit back, relax. This is part of why we preach on never putting money into, and obviously this is not that big of a move, but it's on a 1-minute chart. This is why we talk about this is why we talk about buying crypto with money that you're prepared to lose, because it gets very volatile. Sometimes when it makes sense, sometimes when it doesn't. But you saw what it did. Bought the rumor on the front end. This is why we talk about it. Buy the rumor, sell the news, right? It bought the rumor, it started to pump, and then sell the news, as you can see.
It pumped when he was first speaking right here. It pumped up.
Yep.
And then it just went down, went sideways. The meeting ended and it just collapsed.
Yeah.
So let me ask you before we close off the show. At what price point does Bitcoin need to come down to where you start considering taking out a loan?
To take out a loan?
Yeah, loan. We got no cash. We're brokies out here. You're gonna take out a loan and roll the dice on this bad boy. What's the price point? Obviously, this is not financial advice. This is just crazy shit that we're talking about.
17.5?
17.5. That's actually a level there.
I won't be surprised to see it fill the CME gap at 20 and some change. And listen, to be clear with everybody, Steve, we were just kidding. Like he said, calm down, it's far from over. 16K was a low enough. We're totally just joking.
It's over, we're going to zero, baby.
It's over, we're going to zero. No, we're just messing around. But I think 17.5 probably I'd have a real conversation about it. Like I said, I see it filling that CME gap. My average, I'd have to look at what my overall average in Bitcoin is. I'll tell you this, it's lower than we're at now by quite a bit. So I don't know. 17.5 would be my initial answer to that question. What about you?
We've got the quarter one PIV.
What about you? Are you currently on a website right now looking for loans?
I'm not on right now, but I have been in the past week looking for websites. Let me tell you, the interest rates are not friendly.
Oh my god!
They are.
Yeah,
not
I know
friendly.
they're not. They're
Dude,
awful. Well, I just told you it's 9%.
Yeah, there's one that I think I'm not gonna say the name of it. I don't want people looking at it, but I saw one. I think the percentage was like 20-something percent, bro.
Oof.
Oof. 20-something percent on it.
Oof. And then you got to try to outperform that, aka pay it back in a time that's very less than,
I mean, it's outperformable. You can definitely outperform 20% with Bitcoin.
Well, no, I totally agree. But in a time when things are just anything but sure right now. So hey, here's the question to kind of end the show. Do we come back? What's the orange line that you have there at about 27?
This one?
Yeah, what is that?
Yeah, that's the value area low for the daily range.
Okay, so do we come back and rest? Let's just say this. Do we get back to 27, or are we going to start retesting 27 as resistance?
Well, definitely it's going to be resistance, right? Because we did, but look, it's such a
no.
Big
What I'm saying is,
now.
Can we reclaim 27 today, or are we going to be?
Oh, that's not going to happen today. It's too late
not
already.
Gonna happen today.
The New York session ends at 4:00, and then there's really not a lot of volume happening in trading for the rest of the day.
Yeah, that's a good point. I didn't think about the time.
Maybe later tonight, like around 11, 12 o'clock,
when the Chinese
online.
markets open.
Yeah, and then the London markets open up around like 4 a.m. or something.
Yeah.
But that would be the most bullish case. Obviously, we're seeing here a massive one candle print, which is now strong, right? Because that's easily refilled back up, at least for retested. Yeah. So it can happen, but it'll have to be tomorrow or later this week. It's not going to happen today. Yeah. We're obviously getting the oversold already over here on the oscillator for ChartPrime.
Yeah, and if you guys want to check out ChartPrime, it's really simple. We've got a link in the description. It's really cool.
Good. Look at it. Look at it. We got, when we hit this top here, this is why I like the 3 to 5 minute. It actually works really well in the 3 to 5 minute. Look, it got the reversal right on the same candle where it went red. Boom, reversal. And since then, it's been nothing but down, right? And then now we're hitting the oversold. I like the 3 minute for this oscillator a lot. It's super accurate on the 3 minute. Obviously, I'm not telling people to trade on the 3 minute, but if you're doing daily scalps and stuff like that, this oscillator is really
a good way to keep up.
Yeah.
All right, crypto fam, we love you guys. We appreciate you. You could have been anywhere on a Wednesday, but you're hanging out with us, watching the FOMC meeting, grabbing some extra information on what the SEC is doing, what the Fed's doing. Just remember, question everything.
Trust nothing.
And until next time, hodl
like it's hot.
We'll see you soon.